Welcome to Informed Investor. Anil Ambani, once declared bankrupt and reduced to declaring zero net worth in a UK court, is staging a dramatic comeback through his energy and infrastructure ventures. Reliance Power, its flagship power generation company, has emerged as a multi-bagger stock, delivering staggering returns of 69% returns in the past month, over 147% in the past year, and a remarkable 2,630% returns from its March 2020 lows. It currently trades at its 52-week high. This resurgence is fueled by landmark project wins, courtroom victories, and strategic debt reduction, and a renewed focus on renewable energy. On the other hand, another Anil Ambani-led Reliance Infrastructure has mirrored this success, driven by defense contracts and legal reprise. Reliance Infrastructure shares have rallied 56% in the past month and 111% over the past 1 year. So what's driving this rally, and is it here to stay? Let's dive in and break it all. To really understand the story, we need to go back to the beginning. The Reliance empire was built by the legendary Dhirubhai Ambani, and after his death in 2002, the business was split between his two sons in 2005. Mukesh got the oil, gas and petrochemical business, while Anil walked away with what seemed like the more promising new age sectors: telecom, power, infrastructure and financial services. In fact, in 2008, Anil Ambani even rose as the sixth richest man in the world with a fortune of $42 billion. But sadly, things went downhill. Over the past decade, Anil's empire crumbled under massive debt, legal troubles, and poor business decisions. Reliance Communications went bankrupt and Reliance Capital entered insolvency. In 2020, Anil told a UK court he had zero net worth. He narrowly escaped jail in 2019 over unpaid dues to Ericsson, thanks to a last-minute bailout from his brother Mukesh. To top it off, SEBI even banned him from the securities market in August 2024 for alleged financial misconduct. It was a dramatic fall from grace. Fast forward to now, Anil Ambani stocks, particularly Reliance Power and Reliance Infrastructure stocks, are soaring with the market buzzing talks of a comeback. Now, to give you a quick overview, Reliance Power, incorporated in 1995, became a cornerstone of Ambani's energy ambitions, focusing on power generation, including thermal and renewable energy projects. Reliance Infrastructure, on the other hand, is engaged in the business of providing engineering and construction services for power, roads, metro, rail, and other infrastructure sectors. More recently, it entered the defense and aerospace sectors. Both these companies suffered during Ambani's downfall, with Reliance Power stock plunging from around the 250 levels in 2008 to 1 rupee in March 2020, while Reliance Infrastructure, trading at around the 2000 levels in 2008, dropped to 10 rupees. However, recent strategic pivots have reignited investor confidence, propelling their shares to multi-year highs. Now moving to the main highlight. Why are Reliance Power shares surging? The biggest catalyst behind Reliance Power's surge is a landmark deal that's literally reshaping the company's future. Through its subsidiary, it signed a 25-year power purchase agreement with the Solar Energy Corporation of India for 930 megawatt solar project integrated with a 465 megawatt with a total investment outlay of rupees 10,000 crore over the next 2 years. And this is huge, as it's Asia's biggest integrated solar storage plant, locking in revenues for the company for decades to come. The company also received another significant contract from SGVN Limited for a 350 megawatt interstate transmission system coupled with a 175 megawatt BESS. Apart from this, Reliance Power partnered with Bhutan's DHI to develop India's largest solar project in a rupees 2,000 crore joint venture. The 500 megawatt project will be developed under a 50-50 partnership through a build-own-operate model. Another crucial factor has been the legal relief. The Delhi High Court granted a stay on SECI's 3-year debarment order against Reliance Power and its subsidiaries, allowing them to continue bidding for government tenders. In Q4 FY25, the company swung to a consolidated net profit of Rs 126 crore, completely reversing a loss of 398 crore from the previous year. For the full fiscal year of FY25, the annual consolidated net profit stood at an impressive 2,947 crore compared to a loss of 2,068 crore in FY24. Additionally, the company completed debt servicing of rupees 5,338 crore, including maturity repayment, reducing its debt to equity ratio from 1.61 in FY24 to 0.88 times in FY25. While Reliance Power soars, Reliance Infrastructure isn't far behind. Reliance Infrastructure has become the first private Indian firm to independently manage a full-scale aircraft upgrade program. We're talking about a 5,000 crore defense contract expected to run over the next 7 to 10 years. This foray is their entry into high-value defense and aerospace projects, giving the company long-term revenue visibility. Reliance Infrastructure has also entered into a strategic cooperation agreement with the German arms manufacturer Dial Defense to produce next-generation terminal-guided munitions, which is basically artillery shells. Then, just like Reliance Power, legal victories have been crucial for Reliance Infrastructure. The National Company Law Appellate Tribunal suspended insolvency proceedings against the company after it cleared its outstanding dues of 93 crore to Dhursar Solar Power Private Limited. Reliance Infrastructure's Q4 FY25 results have been even more spectacular. The company posted a consolidated profit of 4,387 crore in Q4 of FY25, reversing a loss of rupees 3,298 crore in the previous quarter. For the full year FY25, Reliance Infrastructure reported a consolidated operating income of 23,592 crore, up 7% year-on-year. The company's profit after tax stood at 4,938 crore in FY25, reversing a loss of rupees 1,609 crore in FY24. Another point to highlight is the company reduced its standalone net debt to nearly zero, 0.08 times to be precise, from 0.49 times the previous year, showcasing robust debt management. Now, what's next for these two companies? India's energy and infrastructure sectors are at a crossroads, and these two companies could benefit from this. Riding the energy wave, India plans to add 80 gigawatts of coal-based capacity by 2032 to meet rising demand, alongside 500 gigawatts of renewable energy capacity. Reliance Power is positioning itself as a dual-threat player, expanding solar BESS projects while maintaining thermal assets. The company's financial turnaround, combined with its aggressive expansion in renewable energy projects backed by long-term PPAs, align with India's clean energy transition. Talking about Reliance Infrastructure, on the other hand, aims to capitalize on the Make in India initiative. Its aircraft upgrade and artillery projects positions it as a key private sector player, opening new growth avenues. The company's infrastructure projects, including metro, rail and power distribution, also provide steady cash flows. With its debt cleared and profitability restored, Reliance Infrastructure is ready to take on new opportunities. Now, looking at this remarkable turnaround, there are several things investors should keep in mind. Let's talk about the positives. Both companies have achieved significant debt reduction, with Reliance Infrastructure going on a completely debt-free on a standalone basis. There is long-term revenue visibility through defense contracts and solar PPAs. They are strategically positioned in high-growth sectors like renewable energy and defense. Lastly, they have witnessed strong recent financial performance with return to profitability. But risks also remain. Both stocks have witnessed high volatility in stock prices. They also have past track record of business failures and debt issues, heavy dependence on government contracts and policy support. Lastly, execution risk on large-scale projects could dampen investor sentiment. Now, all in all, Anil Ambani's comeback scripts reads like a Bollywood drama, bankruptcy to multi-baggers in 4 years. While Reliance Infra's defense pivot is strategic, Reliance Power is the crown jewel. Its solar storage projects could redefine India's energy landscape. But caution is key. This is still a high-risk bet on a man whose empire collapsed before. Would you invest in Reliance Power or infrastructure? Let me know in the comments. Now, moving on to some other important market updates. The World Bank has kept India's FY26 GDP growth at 6.3%, citing strong fundamentals despite global trade tensions. India remains the fastest growing major economy, with growth expected to rebound to 6.6% from FY27. Global growth for 2025 is projected at 2.3%, the weakest in 17 years outside recession. The bank urged developing nations to diversify trade amid rising risks. Maruti Suzuki has slashed e-Vitara EV production by 2/3 for April to September 2025 due to a rare earth supply crunch, lowering the target to 8,200 units. Despite this, it aims to meet its 67,000 unit FY26 goal by ramping up output later. The cut comes as China's export curbs disrupt global EV supply chains. Hindustan Zinc's board will meet today, June 11th, to consider its first interim dividend for FY26. The record date is set for June 17, 2025. This comes after a strong Q4 performance with net profit up 46% year-on-year to 2,976 crore and EBITDA margins rising to 53%. Shares are up 23% in the past month. Kaynes Technology India, via its unit Kaynes Semicon, has acquired power module production lines from Fujitsu General Electronics for 1.59 billion yen as per an exchange filing. This deal comes just days after a 1.8% promoter stake sale raised 624 crore, which will fund the new Kaynes Tech Center, a science tech and education fund focused venture. The stock is up 52% year-on-year but down 24.7% year-to-date. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.